which is currently on our radar is Atul Auto. That has gained in trade after rallying close to about 290% over the last 1 year. Now, according to data from SIAM, Atul Auto has grown faster than the industry in FY15, though the growth rate has fallen drastically this month. Jitendra Adhia, the Vice President Finance of Atul Auto, now joins us on the phone line. Good afternoon, Mr. Adhia, and thanks so much for joining in. In FY15, your total sales growth was about 10 to 11%, but in March that slowed down drastically to about a flat performance, just 0.25% to be precise. What caused this weakness in March, in the month of March?
See, it's a temporary phenomena. We agree that there was a little slowdown and there was a sluggishness in demand. So it was a combination of everything. And since it is being a commercial vehicle, generally the last fortnight, finance has stopped releasing funds as well. So it was kind of a, correction in the market as well.
Hi, Mr. Adhia. Thanks very much for joining in. Through FY15, export has seen a big bump up, but the base for that segment remains very, very small. Do you hope to meaningfully scale this higher in FY16? I mean, how much do you think you could export going forward?
See, let me tell you, at the moment, whatever exports we have embarked, that is quite insignificant, I agree with you, but the current product platform is not suitable for overseas market. We are in the process of just launching that gasoline three-wheeler, which is a correct product for overseas market. And next year, what we expect is that initially it would be a seeding, and sometimes in FY17 we will be able to reap up the fruits.
Okay.
So it is difficult for me to at the moment give you the exact numbers, but all in all, what we expect that definitely there will be a positive movement, upward movement as far as export sales is concerned.
Okay. You indicated in your first answer that, this weakness in March, while it's a temporary phenomenon, in part it was caused by sluggish demand. So you don't think that will extend itself into the first half of, FY16? And what do you think the growth in sales will be for Atul Auto, say in Q1 or in Q2 of FY16?
See, once again I agree that it is likely to remain sluggish in the first half of the current fiscal, and it is expected to get improved in the second half. Although we have a small base, what we expect that we can continue this double-digit growth momentum for the full year. There will be few months or there will be a period where we may, arrest some sluggishness of demand all across. But if we look at the full financial year, we expect that we will be able to continue this double-digit growth momentum.
What about the new variants that you're planning? We understand that new three-wheeler petrol engine is something that's on the cards. Can you give us a sense of what the timeline is looking like and what are the sort of development costs that you've incurred?
We need not to incur a big development cost for that particular vehicle because it is again on our current product platform. But as far as gasoline three-wheeler is concerned, we expect that in the first quarter itself, we are likely to start with a small numbers and then gradually we will ramp up. Although this first year is likely to remain a year for our seedings all across, may it be domestic market or overseas market, we expect a good numbers in next year, that is FY17.
Okay. Mr. Adhia, we understand that the new capacity for the company will come on stream in the second half of FY17. So currently, I think your capacity is what, 48,000 or 50,000 units. How much will your capacity, increase by the end of FY16, and what will be the total capex that you've outlined?
See, at the existing plant, currently my capacity is 48,000 vehicles per annum, which is expanded up to 60,000, which can be expanded up to 60,000 with a nominal capex of say around 7 to 10 crores. And by the time we start utilizing the current plant's capacity, our new plant will be ready sometimes after 2 years, and then there we are going to set up a plant for 60,000 vehicles, which is going to come in 2 phases, 30,000 plus 30,000. And that capex is likely to be in a range of 150 crores.
So your total capacity can be 120,000 units, right? By the end of FY17?
Perfect. By FY17 it would be 90,000.
Okay.
And then once we start utilizing it up to reasonable level, another 30,000 can be ramped up sometimes in FY18 or 19, depending upon the performance.
Okay. So given that you expect your double-digit growth to continue well into FY16-17, how much do you think you could scale up your margins by? I think you're already now inching close to the 13% mark. How much higher, what kind of room do you have on the upside?
See, it is difficult because the market dynamics are different, and altogether, the time to come is very difficult for us as well, because we are under a very fast growth trajectory, so we need to invest all across, including marketing efforts. So, difficult to tell you the exact numbers, but what I can tell you is it will definitely be positive, and it would be upward than the current level.
Okay. You indicated, sir, that your capex will be about 150 crore for, the new capacity which is coming on stream. And you indicated that will be funded via internal accruals. Can you give us a sense about, how the balance sheet of the company looks like?
See, at the moment we have already acquired land, and that was from internal accrual. We are quite confident that the particular capex will be funded through our internal accrual, because considering our healthy growth in the next 2 years' time, we expect. We are quite confident that even after this big outflow of land payment, we are still left with some surplus, and in addition to that, I have 2 years' time to fund that particular capex. So we are likely to do it with our internal accrual only, and we will try to maintain our debt-free status.
Okay. You spoke about exports earlier, but can you give us a sense that in FY16, what would be the export growth that you anticipate for Atul Auto?
It will be definitely better than the current year's level, that is for sure, because in whatever market we have seeded our vehicle, we are receiving a positive response, and my export team is just planning its business. So, will be likely to be crystallized sometimes in the first quarter of the current fiscal. But what I can tell you is will be definitely better than the current year's level.
And will your margins also be better in FY16 compared to this year?
See, as far as export is concerned, yes, it is a little better than the domestic realization. So, you can always expect that it will be better than the current level. 1. 2, since we started gaining on this scale, we expect that our overall margin will also get improved with a better utilization of capacity.
All right, Mr. Adhia, thanks very much for joining in, and all the very best for FY16. We'll touch base with you, of course, once your earnings are out. That's